Everyone knows the Federal Reserve controls the dollar. Everyone knows the IMF sets the terms. They're right. But they're looking at the wrong floor. In 1930, a building appeared in Basel, Switzerland. Not elected, not audited, and not constrained by any national law on earth. It processed gold through wartime blockades. It settled currencies between governments at war with each other. It transmitted policy decisions through encrypted cables that no parliament ever approved. The Federal Reserve plays the game. The biz writes the rule book, and then it burns it. By the end of this video, you'll understand the mechanics behind the most powerful financial institution you never voted for, and why it doesn't need you to. Welcome back to Hidden Forces in History. I'm your host, Jeremy Ryan Slate, the CEO of Command Your Brand. We help our clients to appear on some of the biggest podcasts in the world. Check us out via the link in the description. And now, our story. To understand what the biz actually is, you have to understand the problem it was built to solve. To understand that problem, you can't start in Basel in 1930. You have to start in Versailles in 1919, because the biz didn't begin in a Swiss building. It began in the ruins of a peace treaty. June 28, 1919, the Hall of Mirrors. The German delegation signed the document that ended the First World War. They didn't negotiate it, they were handed it. The Allies' blockade was still strangling Germany. The people were starving. Article 231, the War Guilt Clause, assigned sole and complete responsibility for the war to Germany and its allies. On its foundation, the Allied powers demanded that Germany pay for the entirety of the Allied civilian damages. The final bill was 132 billion gold marks, approximately 33 billion in 1921 dollars, $500 billion in today's terms, assigned to a country whose industrial base had just been spent, whose colonies had been stripped, and whose currency was already under pressure. John Maynard Keynes resigned from the British Treasury in protest and published The Economic Consequences of the Peace, warning that reparations schedule would destroy the German economy, destabilize Europe, and plant the seed of the next war. Well, he was right. He was ignored because the reparations were never actually about collecting the money. They were about constructing a permanent mechanism of financial dependency. Here's the mechanic. Memorize it, because you will see it in use again and again. When a nation owes more than it can possibly repay, it doesn't default in the conventional sense. It negotiates. Every renegotiation requires arbitration. Every arbitration requires a neutral party. And every neutral party, given enough time and enough transactions, accumulates power that no elected government ever voted to give it. The first principle of the playbook is to manufacture a debt large enough that the debtor can never escape it. Then position yourself as the indispensable manager of that debt. The creditor becomes the sovereign, not by conquest, by administration. By 1923, Germany was printing money to meet its obligations. The hyperinflation that followed destroyed the savings of the German middle class with a thoroughness that no military invasion could have matched. What doesn't get remembered is that the mechanisms producing the hyperinflation were knowable in advance. The reparations pressure, the deficit monetization, the Allied refusal to negotiate. All of it was predictable by the people who designed the system itself. What emerged was the Dawes Plan of 1924, named for American banker and eventual vice president Charles Dawes. It restructured Germany's payment schedule and arranged for American banks to lend money to Germany, which Germany then used to pay reparations to Britain and France, who then used that money to repay war debts to the United States. Read that sequence carefully. American banks lent to Germany, Germany paid Britain, Britain paid America, The money moved in a circle, but at every transfer point, it passed through financial intermediaries. It generated fees. It built leverage. It created relationships between the central banks administering that system that had no democratic mandate, no parliamentary charter, no mechanism for public scrutiny. When the American market collapsed in October 1929, the loans evaporated. The system broke. The architects in London, Paris, and New York needed something more permanent, something above the noise of democratic politics. A clearinghouse that governments could not touch, could not audit, could not shut down. Enter the Young Plan. Enter Basel. Enter the building that is still operating today. The Young Plan of 1929 formally called for a permanent institution to manage the reparations transfers. It would need to be politically neutral, immune from national legal systems, and function on trust, the kind of trust that exists only between men who share the same worldview, the same professional language, and the same private certainty that the global financial system is too important to be left to voters. Two figures stand above others. Montague Norman, the governor of the Bank of England from 1920 to 1944, he outlasted 5 prime ministers, 2 world wars, and the economic ideology of an entire era. Norman was not a showman. He believed with something approaching religious conviction that central banks should operate outside the democratic process. The monetary policy was too consequential to be contaminated by electoral cycles. He said this explicitly on the record. He also had a habit when traveling internationally of using a false name, Professor Skinner, to avoid press scrutiny. Hjalmar Schacht, the president of the German Reichsbank, the future architect of the Nazi rearmament economy. He was acquitted at Nuremberg and later a financial consultant to developing nations in the 1950s. One of the most dissonant careers in modern history. Norman and Schacht were not merely professional counterparts. They were close personal friends as well. Their correspondence preserved in the Bank of England archives carries an intimacy that is striking given the historical context. When Schacht's son-in-law was arrested by the German Gestapo, Norman personally intervened with German authorities on his behalf. This is not an accusation, it's a documented fact, and it reveals something essential about the world the biz was born into. These men did not think in terms of nations. Nations were temporary, messy, democratic. They thought in terms of systems. The biz was formally constituted on May 17, 1930, under the Hague Agreements. Its founding charter gave it immunities that no other institution on earth possesses. It cannot be sued in the courts of any member nation. Its premises cannot be entered, searched, or seized. Its staff are immune from arrest. Its communications cannot be intercepted. And its assets, well, they can't be frozen by any government under any circumstances. The IMF does not have these immunities. The World Bank does not. The United Nations does not. Well, not fully. And these immunities were not granted by an international treaty ratified through a democratic parliament. They were granted by a private agreement between central banks. The building was not elected. It was constructed. And the people who constructed it made sure it would never be dismantled by anyone who wasn't already inside it. September 1st, 1939. Germany invades Poland. Normal financial relations between belligerent nations cease. Trade routes close. Diplomatic channels snap. The biz continued to operate throughout the entire Second World War, every single year of it. The Bank of Central Banks, whose governing board included representatives from nations actively trying to destroy each other, continued to meet, continued to settle accounts, continued to process transfers as the war consumed 50 million lives. In March 1939, Germany occupied Czechoslovakia. The Czech National Bank held approximately £6 million in gold, deposited with the biz. When Germany occupied Prague, the biz received instructions from the new German-controlled Czech National Bank, requesting the gold be transferred to the Reichsbank account. Montague Norman authorized the transfer himself. When the news became public in Britain, The Chancellor of the Exchequer was questioned in the House of Commons. The government's initial response was denial. The transfers were documented. The denial crumbled. Norman's defense was framed in institutional language. The biz was a clearing institution. It was obliged to honor the instructions of its depositors. Introducing political criteria would undermine the foundational neutrality on which the institution rested. Examine that argument carefully. Montague Norman was not a neutral algorithm. He's one of the most politically connected financial figures in the Western world, a man who spent 24 years actively shaping monetary policy across multiple continents, who communicated privately with governments at the highest levels. The claim of institutional neutrality in the Czech gold case was naive. It was chosen carefully by a man who understood exactly what choices looked like. Throughout the war, German gold moved through Basel. Japanese payments were also processed. Italian transactions were also cleared. The institution that could not be audited, could not be sued, continued to operate in the shadow of the most catastrophic event in human history. The man steering it from the American side was Thomas McKittrick, a former partner at Brown Brothers Harriman, elected president of the biz in 1940 after the war had already started. His presence gave the institution a veneer of Western legitimacy at the precise moment it was processing access transactions. McKittrick also met regularly with Allen Dulles, the OSS station chief in Zurich, who would later found the Central Intelligence Agency. What was communicated in those meetings has never been fully disclosed. What we can reconstruct is this. McKittrick passed information about German financial operations to Allied intelligence. In return, Allied intelligence used the biz's protected status as a channel for monitoring access economic capacity. Neutrality was the cover. Intelligence was the function. Second principle of the playbook. The institution that appears most neutral is frequently the institution actively doing work that requires neutrality as a disguise. July 1944, Bretton Woods, New Hampshire. 4 Allied nations gathered to design the financial architecture of the post-war world. Out of this conference came the IMF, the World Bank, and the Bretton Woods monetary system, and a resolution passed by the majority of the assembled delegates to dissolve the bank for international settlements. The resolution was proposed by Norway, which had watched the Nazi occupation of its country, financed partly through channels running through Basel. The vote passed, but the biz is still operating today. 44 Allied nations, the victorious nations of the Second World War, convened specifically to build the new international order, formally voted to end this institution. The institution not only survived, but grew more powerful in the decades that followed. How? Well, the third principle of the playbook. You don't need to win the vote. You only need to control the implementation. The key figure in the biz's survival was Dean Acheson, at the time the Assistant Secretary of State. He would later become Secretary of State under Truman and the architect of NATO. At Bretton Woods, he opposed implementation of the Norwegian resolution, and he worked quietly to delay any action on it. The American Treasury, led by Henry Morgenthau Jr. and Harry Dexter White, had supported the dissolution. White had helped write the resolution himself. He understood precisely what the biz had done during the war. But Treasury and State were competing for control of the post-war international economic policy. State won. White was later investigated for Soviet connections, a finding that historians still debate, but which removed him from the field entirely in the political atmosphere of the late 1940s. The resolution was never implemented. No formal reversal, no new vote, no announcement. It simply ceased to produce action. And by the time the post-war institutions were fully operational, the biz had quietly repositioned itself as an indispensable technical partner for the Marshall Plan settlement mechanisms and the administrative backbone of the European Payments Union. The biz made itself useful and indispensable to institutions do not get dissolved. That's how power actually works. Not through dramatic confrontation. The structural indispensability constructed patiently until the people who might challenge you cannot afford it. By the 1970s, the biz had completed its transformation. It was no longer a clearinghouse for reparations. It had become the institutional home of the most powerful regulatory project in the history of global finance. The Basel Committee on Banking Supervision was established in 1974, following the collapse of Bankhaus Herstatt, a small German bank whose failure in the mid-settlement sent shockwaves through the global system. The committee was convened under biz auspices, staffed by central bank representatives of the G10 nations, and tasked with developing common standards for internationally active banks. Note what the mandate doesn't include: the word democratic. The committee is not a treaty body. Its members are not elected. Its decisions are not subject to parliamentary approval anywhere. It produces standards, which are then implemented by national regulators, framed as technical adjustments. The fourth principle of the playbook is never pass a law when you cannot set the standard. Laws require legislatures. Standards require experts. When the public cannot distinguish a regulatory standard from a technical necessity, the standard becomes a law without the inconvenience of a vote. The Basel Capital Accord of 1988, Basel I, established minimum capital ratios for internationally active banks. Now that sounds technical, and that's the point. The risk weighting system is where the architecture is embedded. Government bonds from the OECD nations were assigned a risk of 0%. Banks needed to hold no capital against sovereign debt holdings. This wasn't incidental. It created a structural incentive for every participating bank to hold sovereign debt. Banks would always be willing buyers. Governments could always borrow cheaply. The relationship between financial institutions and sovereign states became permanently entangled in a framework written outside any accountability structure accessible to the people living under that debt. Basel II in 2004 went further, allowing the largest banks to calculate their own risk weights using proprietary models. The theoretical rationale was the sophisticated banks had better risk management than regulators. In practice, the banks built models that minimized apparent risk. The entire architecture of structured finance that defined the pre-2008 era, the mortgage-backed securities, collateralized debt obligations, was designed partly to achieve optimal capital treatment under Basel II. These models said assets were safe, but they weren't. The public narrative of 2008 was simple. Banks got greedy, rules weren't strict enough, and regulators had been asleep. Well, Basel III would fix it. What the narrative omitted is the institutions that designed Basel III were the same institutions that had designed Basel II. No independent investigation, no criminal referral, no review by any body outside the network that had built the system that failed. A new document from the same people through the same process. And Basel III produced an outcome the largest banks understood before the ink was dry. Higher capital requirements to squeeze smaller banks most acutely. They consolidate, they are acquired. The largest institutions, with the capital, the legal resources, and the regulatory relationships, absorb the smaller ones and grow. After 2008 and Basel III, concentration in the largest global banks increased. The too big to fail institutions became more too big to fail. Same playbook, tighter execution. Every 2 months, the governors of the world's major central banks travel back to Basel. There are formal sessions, published agendas, working groups, technical presentations. The documentation is released, eventually, in heavily edited form. And then there are Sunday dinners. The Sunday dinner does not appear on the official program. It produces no minutes, no translators, no note takers, no transcripts, no record of any kind. The governors of central banks of the largest economies on earth sit together around a single table and they talk. About what? We cannot say with precision, and that's the design. What we can reconstruct from participants' memoirs and rare journalistic accounts is the following. The general shape of what gets discussed before it becomes policy in the world outside. The interest rate trajectories, currency intervention thresholds, the management of sovereign debt crises before those crises become visible to markets. When Greece was on the brink of default in 2010, the architecture of the response, the troika structure, the conditionality framework, Well, they didn't emerge fully formed from Brussels or Washington. The conversations that shaped it preceded the formal institutional responses by days, sometimes weeks. They happened at the biz in meetings that produced no transcripts. The coordinated central bank rate cuts of October 2008, when the Federal Reserve, the ECB, and the Bank of England, and 4 other central banks cut rates simultaneously on the same day by the same amount. Well, that coordination does not materialize through real-time formal channels. It's prepared. The relationships make it executable, have been built over years of Sunday dinners, in a room that generates no record. The public narrative framed it as the triumph of international cooperation. Central banks independently arriving at the same professional judgment simultaneously. What the public was not told is the same men who made those decisions have been meeting privately, without transcripts, in a building that cannot be legally audited for decades. The 5th principle of the playbook is to separate the decision from the announcement. Make the real decision in private, among trusted counterparts, in a space with no legal accountability. Announce it publicly, framed as an independent professional judgment. By the time the public encounters the policy, the decision is irreversible. The biz is the room where the decision is actually made. There is a version of this argument that deserves to be taken seriously. Central bank communications are market sensitive. Confidentiality has legitimate value, but confidentiality and immunity are not the same instrument. Confidentiality protects the content of discussions. Immunity prevents accountability for their outcomes. You can have confidential central bank communications without a building that cannot be audited by any legal authority on earth. The choice to combine both was not a technical necessity. It was a structural preference. In 2019, the biz announced the establishment of the Biz Innovation Hub, a research and development center for central bank digital technologies, with nodes in Hong Kong, Singapore, London, Paris, Stockholm, Toronto, and Zurich. The language is neutral, technical, forward-looking, but it isn't. The Biz Innovation Hub is the architectural laboratory for the next phase of financial control. To understand what that means at full scale, you need to understand what central bank digital currencies actually are. Not the promotional version, but the technical specification. A CBDC is a digital currency issued directly by the central bank, recorded on a ledger that the central bank controls. Unlike physical cash, anonymous and untraceable by design, a CBDC is programmable, a currency in which the issuer embedded rules directly into the unit of exchange. Rules about where it can be spent, when it expires, and what categories of purchase it applies to. Rules that can be altered remotely, without consent or awareness of the person holding that currency. The technology exists and is operational. Project Nexus designed a multi-currency, cross-border CBDC settlement network. Project Dunbar built the same capability focused on Asia-Pacific, involving Australia, Malaysia, Singapore, and South Africa. Project M-Bridge went further, building a functional, live cross-border CBDC platform, connecting the central banks of China, Hong Kong, Thailand, and the UAE, with the biz coordinating throughout. Read that participant list carefully. China, Hong Kong, Thailand, UAE. The institution that cannot be audited, operating under full diplomatic immunity, building cross-border financial architecture since 1930, is now designing the plumbing through which programmable money will flow. The biz has been involved in research or operational development of CBDC infrastructure for more than 90 central banks worldwide. This is not research. That is the construction of an architecture. In 2023, the biz published its annual economic report with a dedicated chapter titled Making the Most of the CBDC Opportunity. The technical infrastructure described points toward a system in which the central bank has complete visibility into every transaction in the economy, not samples, not aggregates, every single exchange of value with programmable rules, and in a fully implemented system in which physical cash has been eliminated with no alternative. The people designing this system meet in a building that cannot be audited under diplomatic immunity, in sessions that produce no transcripts, operating under a charter written specifically to be immune from democratic oversight. The century-long progression laid flat in 1930. An institution is created with legal immunity to manage money flows governments found inconvenient. 1944, a democratic vote to dissolve it's ignored through bureaucratic maneuvering. 1974, it begins writing the rules governing every major bank on Earth, bypassing every parliament. In 1988, those rules structurally advantaged the largest banks and sovereign debt buyers. In 2008, a crisis caused partly by those rules is resolved by the same institution, concentrating power even further. In 2019, it opens a laboratory to build programmable money for 90 central banks. Each step individually reads as technical. Taken in sequence, it's something else entirely. Name it explicitly, because naming it is how you see it in real time. The first principle is to manufacture necessity. No electoral votes to create an unaccountable institution. You create a problem of sufficient complexity that an unaccountable institution appears to be the only solution. In 1919, it was German reparations. In 2008, systemic collapse. In 2020, pandemic distribution. Each time, the complexity of the crisis justified emergency powers and expansion of institutions outside democratic control. The crisis is real. The institutions that benefit from the anticipated the opportunity. The second principle is to build your network above the electoral cycle. Central bank governors serve longer than prime ministers. Technocrats outlast politicians. Montague Norman served for 24 years. His relationships persisted across national lines, across wartime hostilities, because the network he built at a level that does not respond to elections. Build your relationships where they persist, and will you shape policy regardless of what the vote says. The third principle is that when threatened democratically, root around implementation. The Bretton Woods vote happened, and 44 nations in a formal session resolved to dissolve the biz, but nothing happened. The vote was won, the implementation controlled by people with different interests. In the gap between democratic resolution and executive action, the institution survived and grew. The vote is acknowledged. The execution is managed. The outcome preserved. As for the fourth principle, never pass a law when you can set a standard. Laws require democratic legitimacy. Standards require expertise. The Basel Accords reshaped global banking without a single legislative vote in any member nation. The coercion was structural, not legal. The people designing the structure answered to no electorate. The fifth principle is to separate the decision from the announcement. The real decision is made in private, among trusted counterparts, in a space with no accountability. The announcement is made publicly and framed as an independent, professional judgment. What looks like a democratic institution making a public choice is frequently the public revelation of a private decision already made, in a building over dinner with no transcript. These 5 principles were not invented in Basel in 1930. They did not die with the gold standard, and they're operating right now. In every major monetary policy announcement you've watched delivered, as though it emerged from a rational, independent, and technically necessary process. The architecture is the same. Only the instruments change. Here's the question that the mainstream financial journalists and most governments have never consistently declined to ask directly. If the biz's genuine value is in neutrality, its ability to function outside of national politics, to serve as a trusted intermediary in crises, then why does it need absolute diplomatic immunity from every legal system on Earth? Neutral institutions exist. The International Committee of the Red Cross operates in conflict zones, manages assets, coordinates across belligerent parties. It holds significant privileges. Its accounts can be examined. Its leadership can be questioned by governments with legitimate concerns. The biz cannot be examined by any government under any circumstances, including circumstances in which it authorized the transfer of gold from an occupied nation to its occupier. The institutional answer is confidentiality. Central bank communications are market sensitive. The biz needs immunity to guarantee member banks can communicate without fear of national court access. But confidentiality and immunity are different instruments. Confidentiality protects content. Immunity prevents accountability for outcomes. You can build a confidential central bank communication channel without making the institution immune from every legal system on Earth for the entirety of its existence. The choice to combine them was not a technical necessity, it was a preference. And it was expressed by men who had specific plans for what that institution would be used for, and who understood those plans would not survive public scrutiny. And they were right. The plans didn't need to survive public scrutiny. The institution was immune. The biz today is more institutionally powerful than any point in its history. Its working papers drive the academic policy and the conversation of monetary economics. Its annual reports are among the most closely read documents in global central banking. Its innovation hub is constructing blueprints for financial infrastructure that will govern the next 50 years. None of it was ever voted for. None of it's subject to democratic scrutiny. The Federal Reserve can be partly audited by Government Accountability Office. The ECB faces examination from the European Parliament, limited, imperfect, but structurally present. The Bank of England appears before the House of Commons on select committees. These institutions have genuine accountability gaps, but the mechanisms do exist. The principle that public monetary institutions should answer to democratic bodies is at least architecturally present. The biz has none of it. Not a partial audit, not a parliamentary committee, complete immunity by design from its founding to the present. Now overlay that against the CBDC architecture being built across more than 90 central banks. A programmable currency is a fundamentally different relationship between the individual and the issuing institution. Physical cash is anonymous. It transfers value without recording the identity of the participants. Bank deposits are recorded, but not directly controlled in real time. The central bank cannot reach into your account and alter the terms of your money without going through the banking system first. A CBDC collapses that buffer. The money is issued directly by the central bank. The ledger is maintained directly by that same central bank. And the rules are embedded in the currency itself. And the rules can be changed by the institution that controls the ledger. Remotely, technically, and without any legal process, a citizen could challenge. This is not speculation. It's in the stated technical specification in the Biz Innovation Hub documents. Programmability is described as a feature. The ability to embed behavioral rules in currency is described as a policy tool. The institution making that argument cannot be audited, cannot be sued, and cannot be compelled to explain its decision to any court, any parliament, any public body on Earth. And it is building the architecture that will make every economic transaction in participating economies visible and conditionally controlled by institutions managing the ledger. Money is not merely a medium of exchange. It is a medium of independent action. When you can spend freely, you can choose freely. When your currency is programmable, your choices are conditional on the approval of the institution that controls that code. The Biz Innovation Hub is writing the code. 90 central banks are implementing it. The institutions doing the coordination has full diplomatic immunity from every legal system on Earth for nearly a century. Same playbook, different century. Infinitely bigger lever. There's a specific inculcation technique that the institutional power deploys against scrutiny. Not silence. Silence attracts attention, complexity, technical language. The deployment of specialized expertise as social shield. The biz documents are dense, precise, and saturated with a vocabulary of macroeconomic modeling and monetary policy mechanics. Most journalists can't parse them fluently. Most elected officials cannot engage with them in detail. Most citizens cannot at all. The density is a feature. It ensures that only those who speak the language, only those already positioned inside the system, can evaluate the system claims about itself. Ask any financial professional about the biz, and they will tell you accurately it's not the central bank for central banks, that it hosts the Basel Committee, that it does important work on financial stability. All true. none false. And none of it will tell you about the Czechoslovak gold, the Bretton Woods vote, and the Sunday dinners with no transcripts, or the 90 CBDC projects being coordinated in a building that no legal authority can inspect. The complexity is camouflage. It only needs to be thick enough that the cost of penetrating it exceeds what most people are willing to pay on any given day. What cuts through complexity is not individual facts. Those can be isolated, contextualized, neutralized. What cuts through it is sequence, the unbroken sequence of institutional choices made by the same class of people across a century, consistently in the same direction, towards immunity, towards opacity, towards the concentration of financial decision-making in institutions that answer to no electorate. That pattern is not classified. It is in the Bank of England archives, the Bretton Woods conference records, the Basel Committee publications, the BIS annual reports, and the Innovation Hub project documentation. Every element available to anyone willing to look to see the full sequence rather than a single piece in isolation. The sequence is what they rely on you not to be able to assemble, and that's the entire strategy. Not secrecy, sequence. The BIS is not the only institution built on this architecture. It's the original, the template from which others are derived. The same logic that constructed the BIS in 1930, manufactured necessity, technical authority, immunity from democratic accountability as a precondition of function, has been applied to virtually every major international financial institution that followed. The IMF, the World Bank, the Financial Stability Board, the Basel Committee itself, and now the Innovation Hub. Each was introduced as a technical solution to a genuine problem. And at the level of immediate function, each performs useful technical work. Financial stability matters. International cooperation matters. But the architecture also matters. Who designed it? Who controls it? Who is accountable when it fails catastrophically? And who, when it fails, gets to design the replacement? Since 1930, that answer has been the same institution, the same class of people, the same building in Basel. And they are building the next system right now. If you want to follow the architecture to its next address, to the institution that operates above the BIS in the hierarchy, well, this channel has been mapping that out since the beginning. The next video is already waiting. Different building, different century, older playbook. This has been Hidden Forces in History. I'm Jeremy Ryan Slate. Please like this video, leave us a comment, and smash that subscribe button if you want more Hidden Forces in History.